Good morning, this is Naeem Aslam. I'm back with an update on coronavirus and its influence on the financial markets. Firstly, policymakers are going to be immensely strict with their quarantine measures this week, and they're going to make sure the public understand the meaning of quarantine, because that is the only way possibly now in order to slow down the outbreak of coronavirus, especially given the fact the situation is enormously dire over in Europe due to the outbreak, and we haven't seen the peak of this outbreak over in the UK. So hence the outbreak situation is going to have a very negative or adverse influence on the FTSE 100 index in the coming weeks and in the coming days as well. Now, let's begin by looking at the equity markets. Because of the breakdown in communication and because of the failure of having the approval of the coronavirus aid package, which Stephen Mnuchin talked about over the weekend, the 2 trillion worth of aid package, it didn't pass through Congress. So what we have in the equity market is a massive breakdown, because what we've seen in the S&P 500 futures and also the Dow Jones futures, both hitting the limit down overnight when the futures started trading. So now going into the European session, red is again the dominant color, and given the fact that the S&P 500, if we look at on a weekly chart, broken is the previous week's low, I think the odds are heavily in favor of the markets to continue its move to the downside. In the currency market, I'm specifically focused on sterling. Why? Because we've seen that massive rally to the upside. It touched 119 against the dollar. Now it is sitting at 1.17, and I believe that the strength in the dollar is going to pick up once again because of the safe haven trade, and sterling is going to continue to move to the downside. Again, we haven't seen that enormous outbreak that we are still waiting for that number to peak in the next 3 days, in the 3 weeks. As for gold, in a commodity space, the battle continues whether the price is going to continue to move to the upside of the 1500 or not. And this is despite the fact that, if we look at the overall Dixie index, the dollar index, it isn't really showing that much of an upward momentum. So we have the dollar index, which is weak. We have the equity market, which is immensely fragile. And despite all these two important factors, we're still not seeing the upward momentum in gold price. Despite all of this, I still maintain my view. I think anything below 1500 for a gold price, it is a buy. Why? Because the loose monetary policy is going to continue in the coming quarters or in the coming year in order to soften the blow of coronavirus. That's all for today. See you guys tomorrow.